Hello, good morning and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 6th of October. Now, market sentiment has been very choppy in recent days. We haven't seen any real traction either direction really across equity markets, higher and lower on alternating sessions, and again yesterday's gains seem to be seeping away once more, with the markets falling away early morning today. But one of the trends that we are starting to see regaining traction is the rise in bond yields, which is now also going to help the dollar higher once more. It's interesting to see that these forex major pairs are impacted by the strengthening dollar once more today, also across commodities as well, with the likes of silver falling away. Now, one of the interesting moves we've seen overnight from the Reserve Bank of New Zealand is a rate hike. Now, we've seen this rate hike coming as expected, and interestingly, the Kiwi started to find a bit of support off the back of that, but is seemingly now starting to see that the strengthening US dollar has weighed on that Kiwi, and it's being dragged lower along with the rest of the market. But still, it's likely to be that the Kiwi remains an outperformer across other major currencies due to that tightening of the Reserve Bank of New Zealand. Now, today we've got the ADP employment change. Now, that tends to be seen, or sometimes is seen, as a bit of a harbinger for the payrolls report on Friday. ADP number is expected to rise to 425,000. So will that improve the non-farm payrolls report on Friday? It'll be interesting to see. But the charts we're looking out for today, I'm looking at euro dollar because of the strengthening dollar. So we're starting to see that euro dollar falling over. Look at the technicals there, and also looking at the impact on the technicals from that Reserve Bank of New Zealand rate hike. Well, starting to drop back again, but still seems to be fairly range bound. And finally, finishing off with the silver chart. Silver seems to be faltering once more. So let's have a look at the charts. And on the INFINOX MT5 platform, starting off with euro dollar, we can see that the little technical rally that we had back end of last week has just started to fall over again, and it's interesting that that is starting to see. I mean, if you look at this euro dollar chart, well, you zoom out, you can see that all these moves are in downtrends, aren't they? And actually, you could even argue that this downtrend is accelerating away from the downtrend, so you could arguably even make more downtrends. And it certainly seems as though that the market is still falling away, lower highs, lower lows, putting pressure to the downside. And look at the importance of this move. Well, if it goes below the 1560 area, you're then back into the 14s really, 1420 to 1490, old key breakouts from 2020, June 2020. So quite a big drop away from here to there. In terms of where the market was back all those months ago. But certainly it looks as though that pressure is growing once more to the downside. We've seen that the market is falling away today. Again, momentum is negative. RSI falling at 35. Wow. It does seem as though that the rallies are being sold into, and a move below that 1560 level really does open that downside again. Obviously, that's key resistance at 1640 initially, but the bigger resistance comes in at 1660 to 17 figure. And onto the Kiwi. Well, interesting. If I zoom out one level, you can essentially argue that the Kiwi is range bound, and I think that one of the reasons why it's not underperforming and not falling away is that the Reserve Bank of New Zealand is on a tightening cycle, and that helps to support the Kiwi dollar. And we can see this ranging Kiwi against the US dollar, but there is a mid-range resistance that's now sort of built up, 69.60 up towards 69.80 resistance there. But interestingly enough, look at the hourly chart. You can see that was the Reserve Bank of New Zealand move. It spiked higher and then moved back lower again. The market pretty much anticipating that move from the RBNZ, so that didn't help it, but it's certainly fallen away. And you could argue a little top pattern there on the 4-hour chart. You could argue around about 50, 60 pips of downside move is the target. So testing the lows again would be where we'd be coming out from that. And I think retesting these lows sort of around 68.80 down to 68.60 is likely to be seen. I'm not really anticipating too much decisive downside as the RBNZ tightens, but certainly for now, I think within the range you're looking to the downside. And finally on the silver chart, well, you can see here lower highs, lower lows, trending lower. All these lines and moving averages and momentum indicators are all pointing bearishly. We've had that technical rally, which initially went, and then it started to lose momentum and it started to roll over, interestingly enough, around the resistance 22.75 to 23 figure, big area of resistance. It's now started to fall over underneath that and likely to now fall over and retest the lows once more. You can see that initial support to watch out for is 22.27. If the market starts to fall below that, that would certainly suggest that that is rolling over and then likely to then retest the old key lows, 22 figure to 21.50 area, 21.40. And I think that that's likely to be seen, but a clear barrier there around 22.75. So watching that initial support at 22.27. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Friday for a crucial non-farm payrolls report. So I'll leave you with the INFINOX support and resistance table, and I will speak to you then. Thank you very much.